welcome to Women in Fintech and Codi Fintech Panel. I'm Joanne Hong, I'm with Silicon Valley Bank, SVB. We help fintech startups in their banking journey, everything from seed through IPO. As part of being with SVB, we are on a little bit of our comeback journey this year after the events of last year, getting acquired by First Citizens. I think as part of our comeback journey has really been a part of integrating ourselves a bit more deeply within the tech community and with founders and operators and VCs, and a community that's very dear to me is the Women in Fintech community. So I'm super grateful to be here, to be sponsoring, and really excited to hear from our panel and really look forward to hearing from all of you and sponsoring a lot more events to come.
Thank you so much. Yeah, a huge thank you to SVB and Codi for making this event possible, and thank you to all of you for being here, as well as our panelists and moderator, of course. Women in Fintech is a nonprofit that was founded in San Francisco in 2015. We help women create opportunities to build networks, really, through events like these, and also just by educating them and empowering them within the space. We've grown to over 5,000 members and have expanded into Austin as well as New York. So if you're not already a part of our community, follow us on social media, join our Slack. We're really excited to have more members and just to be expanding our network as well. Yeah, and without further ado, thank you so much. Pass it over to you.
Awesome. Okay, does this work? I feel like okay, there it is.
Okay, great.
Awesome. Also, I think this room is small enough, so if anybody wants to skip the mic and also just talk, I think that's an option. What do y'all feel? Should we skip the mic?
Yeah.
Why not? Yeah, it's a little more intimate. No need for a mic, I think.
Hear?
Yeah.
Okay, cool. Yeah.
Yeah, what do y'all think? Yeah, and if it gets, you can't hear, then just, boo at the panel. It's fine.
Sometimes I don't project, so just don't be shy.
It's just that this thing seems like it might be more work than
Yeah.
So anyway, welcome everyone. Thank you so much for Women in Fintech for hosting, for everyone who showed up, of course. Super nice warm day outside San Francisco. There's probably a park you could have been sitting at, but you chose to come here, which was the right decision because you're gonna hear some great stories. Huge thanks to SVB for sponsoring and then Codi for this great location. I come through this place all the time, but I had no idea there was this awesome co-working space. So thank you everyone. And with that, let's kick it off. So just a quick intro, myself, I'm Kalyani. I head up partnerships at Sardine, which is a fraud and compliance platform. And I'm just excited to be a part of this community and to help tell the stories of really great women here. So let me quickly introduce 4 of them, and then we'll kind of get into the questions. And then maybe if we have some time, we can do some Q&A. I think there's somebody here that already wants to ask the tough questions. So all good, all questions are good. So if you have any, we'll try to make time, and then just keep it kind of free flow. Yeah? Okay. So with that, let me introduce. Might be kind of skipping a little bit of order here. Firstly, Vrinda Gupta, who's founder of Sequin, which is the first debit card and checking account focused on women, and you're fighting the pink tax, which I think is such a great idea, so we want to hear more about that. Interesting story as I was getting to know Vrinda was the fact that she previously worked at Visa and she got rejected when she applied for the very credit card that she helped launch. So I'm sure that ties into kind of, what took you to building Sequin. So super fun story, want to hear more about what you're building. Then over to Catherine from Upfront Ventures. Catherine's an early stage VC focused on fintech and vertical SaaS. I found what was really fascinating about your story is that you started your career at the Federal Reserve, which is not a very common place many of us start our lives at. So super interesting, and I think you mentioned that the particular pull there was the fact that there was Ben Bernanke, and this is right after the 2008 crisis. So super interesting story. I'm sure lots of things happened between then and finding yourself an early stage VC, but super nice to have you here, Catherine. And then we have Lizzie from TTV Capital. Lizzie's also an early stage investor focused on fintech, but interestingly started in something not so fintech related, which was power and utilities. And I think Lizzie's a great story of how you sometimes have to cold call your way into the job that you want. And I understand that's how you basically got started in early stage investing in fintech. So I think that is super inspirational. I think we all need to be cold calling more to make things happen. So thank you, Lizzie. And then last but not least, Kelsey from Aura Finance was building a psychology-based financial wellness and investment platform. And I was asking Kelsey what she did prior to this, and part of her inspiration, maybe some of you know this, but Kelsey had her own version of Sex in the City for financial awareness. So a lot of blogging, a lot of great content on there, some of it very spicy titles. I don't know if I should announce them here, but I think right after this you're all gonna get your phone and figure those out. So again, all phenomenal people and leaders here, super excited to share their stories. So with that, let me kind of kick off some questions for the panelists. So I always say nobody really woke up and said, I want to go work in payments or in fintech, but somehow we all ended up here, right? So for each of you, just give us that quick story, or the moment when you knew this was a space that you wanted to work in, this was a problem that you wanted to solve, right? So with that, maybe Catherine, why don't you kick it off a little this way?
Yeah, I'm happy to. As Kellyanne mentioned, I started my career at the Federal Reserve in New York. This is a couple years after the 08-09 financial crisis. I was bright-eyed, bushy-tailed. I was I want to go execute on monetary policy and get us out of this global recession. Moved over pretty quickly to the financial regulatory side as they were setting up this annual stress test the Fed kind of runs of some of the largest FIs, and I was wow, these are the biggest FIs in the world. I can't wait to see how they run their business. And I was so underwhelmed with all of their processes, their operations. Don't even get me started on their legacy tech stack. So it was a natural kind of parallel when I'm from the Bay Area. I went to school out here and then was kind of always watching and seeing kind of the rise of fintech, and I was I'm very bullish on fintech. I'd love to go kind of explore that. Thought I was gonna go operate, but then met up front, and the rest is history from there.
I started my career in startups. I worked in ed tech, I worked in fintech, but fintech wasn't a word at the time, so I didn't even really know I was in it. And I also worked in retail tech at Rent the Runway. Always wanted to do something more entrepreneurial, but like many, I graduated college with pretty significant student debt. And so at 20, I had 150,000 of it. And so going to work at a startup really wasn't in the cards for me. And so I was lucky enough to get a job at Goldman my junior year, and I ended up staying for 6. And ultimately, rather than work with hedge fund managers, I really wanted to help more people at the beginning of their journeys, and ones that particularly might experience a higher level of anxiety around money. And so left the firm in February 2021 and joined a program called On Deck, which was a founder's fellowship all about going from 0 to 1. Met my co-founder there, although I'm giving the very concise version of it. That's where we really started to iterate on our ideas and what we wanted to see in the world, and both very personal experiences on why we're building what we're building, because we experienced the pain point directly ourselves. So that's how I found myself here. I started in power utilities, so it's just sort of an anecdote of that there's no linear path to anything that you do in your career, and sort of found my way to San Francisco, was surrounded by tech and VC, and really wanted to get into this ecosystem. This really felt like the lifeblood of the city, and cold called City Ventures, and initially was trying to get into impact investing. I was closer to my power utilities world, and I wanted to have more of that impact lens, but then ultimately got the role on the fintech team. And as I thought about it, I honestly, I didn't choose fintech. Fintech chose me, but as I thought more about it, there are a lot of parallels to utilities in terms of you don't think about the power sources that generate the lights when you turn them on, in the same way that you don't think about all the plumbing when you swipe your credit card. And so there is actually a lot of that infrastructure that was really interesting and exciting to me. And now I can't imagine not being in fintech.
Awesome. So my family and I are first-generation immigrants from India, and I really watched my mom disproportionately struggle with the financial system growing up, and that was really the only thing she was afraid of as this very feisty immigrant mother. And so when I went to work and find my first job, I was really interested in financial services to just empower myself, and I knew it was always something that was really important. And so I worked at Visa for 5 years. I built many popular credit cards, and I built the Chase Sapphire Reserve, which some of you may have in your wallets today. And I got rejected from the credit card that I helped create. And it was this moment where everything kind of came back, and I started thinking about my mother and how much she struggled. And I was looking at myself sitting in the middle of the financial system building these products and getting rejected, and I looked around and saw women disproportionately are making avoidable financial mistakes despite having so much spending power. We control 85% of spending in the US, which is incredible. And that spending's not being rewarded. We're still making mistakes. And this year is the 50th anniversary of women not needing a man to sign for us to open up a bank account or a credit card, which is really not ancient history, right? 50 years ago. In any case, so I left Visa, got my MBA, and decided to do something to help women really conquer all of our spending power and recognize that and fight the threats against it. So founded Sequin. We're actually launching next week. It's a debit card geared towards women. The first one designed with women in mind. We're offering up to 6% cash back where we're spending, so we'll talk about that more. But yeah, that's how I got here.
Awesome. Such great stories. Thank you. So you're all solving for interesting problems. Some of you are investing in people and problems that they're working on. Some of you, obviously, as founders, are passionate about problems you've chanced upon. Some of it through personal journey, experience. So tell us, as you're working on some, your own set of problems, what are some of the bigger opportunities out there that you maybe wish you could also solve? You had, 20 more hours in a day, or that you wish another entrepreneur would help solve, right? So I just basically want to get a sense of what else is there in the space that you think someone should be solving for? And maybe we'll go the other way for change, Vrinda.
Yeah, sure. So after I got rejected from the credit card I built, I started looking around, and Time's Up was happening at that time, Me Too was happening, just saw how much power and influence we as women had. But as I was looking around at products focused towards women, especially in financial services, I could count on one finger, basically, another company that really is serving women. And that's kind of later on, right? Investing happens slightly later in our journeys. And so I didn't see anyone really truly creating from the very beginning with your first checking account, with debit cards, thinking about credit, etc. And so I'd actually hoped I could join another company that was doing this, and then I looked around, I couldn't see one, and so I said, okay, maybe I should do it. So I really believe in women, and there, I forgot what it was called, but there's this great wealth transfer, right? Where, boomer men are passing and transferring the wealth to women, and now young women just have so much spending power. So I feel really excited to get to work on this problem space, and I really want to see more women focusing on this space because it is a huge, huge opportunity, and I only have so many hours in the day, so.
Mine sort of plays off of what you just said, but I feel like I haven't found a company that's totally cracked the code in wealth tech. I think there's a lot of companies that have tried to solve the wealth problem, whether that's estate planning, whether that's learning how to optimize your assets based on what you have and what you're going to earn, the planning around that, and part of it is because a lot of it is commoditized to some extent. It's really hard to differentiate. On the other hand, it's also really hard to fully automate because you kind of always need a human in the loop. But I feel like just anecdotally, so many of my friends and my family, like no one knows what to do with their money. Like everyone's always trying to figure out if they should put it in the stock market or put it into a high yield savings account or like which credit card they should buy. And like truly, this is why I think we're going to get to this question later. Why I'm still bullish on fintech. Like people still don't know what to do with money, and I think a big part of that is the generational transfer and wealth transfer that is happening, but there's still just a lot more, I think, that wealth advisors can do for consumers. Or fintechs can do for consumers.
I fully agree with that, but that's also what I live and breathe. I'm going to give an alternate example. My dear friend Gwyneth is in the room, and she's heard me tell this 100 times, so I'm sorry. I'm obsessed with alternative sources of fundraising, particularly as it can put power into the hands of women and underrepresented founders. So this past year, me and many other companies realized how challenging it was to raise venture dollars. And so when we found one pool to be cold, we jumped into an alternative one. And we started looking at the philanthropy and the DAF world. Donor-advised funds are an alternative source of capital. And there's $260 billion in it. And so we as a company, also obsessed with psychology, started talking to people that we knew had DAFs or folks that gave larger dollars in the philanthropy space. And if they rejected us from angel investing, we said, well, what if you did it on behalf of your DAF? And they did. And the reason for that was they had a tax deduction when they made the investment in us. And the real reason they did it is because they were used to flexing that muscle. Most women aren't used to writing angel checks. They make up the minority of angel investors, and they're intimidated by it. These are people that would write a $25K check to the ballet. They'll buy a $30,000 purse, but they're intimidated about buying into a startup for $5,000. So I'm very obsessed with using DAFs as a tool to invest in catalytic companies and make impact. There is definitely a product in there, but a company like myself is leveraging it for our own success right now before we can, or find someone else that can pursue it as a product.
I'll take the angle of maybe more of this like systemic side of it, just being kind of like an econ geek, where I think that's, you know, with the explosion of fintech, there's been a lot of fintech selling to other fintechs, being like the operating infrastructure for other tech companies to power kind of financial services, the way that payments flow. I don't necessarily think that there has been, and this kind of strikes to my original reason why it was the whole reason why I thought, oh, I'd love to go work in fintech, is that I think financial services, like the traditional financial services like a bank, is still very, very much broken, and fintech hasn't necessarily seeped into that traditional industry. And I parallel it very much to, you know, you look at, it's very much still male dominated, it's still very much an old school mentality about, you know, how you like the work life like culture, things like that. And part of it is also the way that business itself is run, and the way that there's a lot of inefficiencies that come with running a large scale FI, and they still aren't implementing tech. Like when I was there talking to like the heads of like Citi and JPM, they're like, yeah, we're doing AI. They were not doing AI. And like still today, they really struggle with the idea of like what AI means for them. And so for me, I think, you know, there's like as of 2023, there was 4,700 banks out there. That's actually decreased by like 15% year over year. And so what we're seeing is also, you can't have a lot of the power in your JPMs, your Citis, your, you know, Wells Fargo, your Bank of America. There needs to be more balance around like the financial system so people can actually get access to credit and capital in underserved communities. And so I would love to see more tech, like fintech solutions being built for traditional financial services.
Nice. So nice mix of like consumer-oriented themes, and you know, obviously for the enterprise buyer as well. So that's really interesting. So a lot of good stuff there. Thank you. Maybe let's think about it this way. So you're all obviously very excited about fintech, but I'm always curious. Actually, wait, hold on. We're going to take a moment to poll the audience, which I probably should have done at the start. I'm kind of curious because we were wondering as you all came in, how many of you are operators? Awesome. Anyone here investors? Also, okay, maybe it's a mix of like angel or, you know, it's awesome. Anybody else? I guess I'm sure there's more than two categories. Anybody else? I don't know, on a life sabbatical and just excited to hear about fintech. It's awesome. Anyone doing like advisory work and kind of probably seeing a whole lot? Great, awesome. You know, as I said, it's always interesting to know who the audience is, but it sounds like, as I said, everyone's kind of excited about the themes. But, you know, as we were thinking about that, one of the questions I actually had also for the panelists is, everyone seems really passionate about the fintech space, but maybe it's a little bit of like, what do you do when you're not working, but slash, if you weren't working in fintech, what would you actually be doing? Anything that comes to mind?
I go first.
Yours is gonna like really blow us
feel
all
like
up.
you're-
yeah.
So go for it, and then I
Answer,
will.
for sure.
Well, I thought about it a lot. I would open up a glamping company. I would buy a big property, and I would put tents and make them glamorous, and basically run it like a bread and breakfast. I actually tried to do this a few years back, but I couldn't get fire insurance. So California makes that really challenging. But I love the outdoors. I spend a lot of time in the outdoors when I'm not working. So I would love to make an eventual career out of it.
So what's interesting in your story, Kelsey, is it almost like kind of comes back to a little bit of the fintech theme of like there's an insurance and an insurance distribution problem, right? So maybe this is like showing that ultimately
Democratize fire
everything.
insurance.
Well, that, yeah. But it sounds like everything ultimately is a fintech problem. So super interesting. Anybody else? What would you do, Catherine? If you were.
I think if I could choose, I'd love to run a nonprofit, focused on economic mobility. I think when I was in New York, I volunteered at one called America Needs You, and like was a big fan of it and would have loved to been more involved. So yeah.
Lizzie?
Well, this would have to come with some sort of level of fame, but I would love to be a judge on Top Chef. I love Top Chef. It's like my favorite thing to do on Wednesday or Thursday after it's aired, and yeah, so I think I would want to do that.
That's awesome. Honestly, I've spent no modicum of time thinking about this, but as I'm thinking live, I feel like it'd be really fun, but also very challenging to run a beauty salon. I do eyebrow threading for my friends, and that was my side hustle in college, so I think I love like the chit chat. Yeah.
I love it. Because again, like the entrepreneurial theme sounds like that's just like been in your blood, whether it's eyebrow threading or launching debit card for women, so it's awesome. I also feel like I'm sure there's some niche like vertical SaaS play there, right? With like embedded payments and the whole thing. So it all kind of comes back to fintech. So I think if anything, that was the takeaway here, that everything is a fintech.
Yeah.
Awesome. Okay, so now we're gonna play the game of we've got 2 investors and then we've got 2 founders, right? And I'm sure we're all on the same page, but I'm sure you kind of like sometimes are in conversations sort of across the table from each other. So I always like to ask the VCs this question first, which is, what are the kind of main mistakes that you think founders do? Maybe first time they're fundraising, right? They're kind of like green to the process. What do you see as a common mistake that founders do with fundraising?
I think maybe I'll tailor it like a bit to the audience where like I do get a lot of cold inbound, but I would say 90% of it is actually from men. And I think there's like maybe like a false narrative where like investors don't respond to cold inbound, or you should have a warm intro or something like that. And I think that's a mistake. I think, every shot you take is one closer than 0%. And so that's one thing where, I do wish that, like, I always say, like, try, and, like, if it doesn't, I try again, actually, because the follow-up will increase your rate of, like probability of being, like, getting the meeting. So I think that's one that I think is, like, actually maybe, like, a myth, I'd say, or at least for me personally, I actually do open my cold inbounds.
First, I think it's really hard to give a pitch. You basically have 25 minutes to articulate your entire thesis, and for all of the time that you spend on the company, you get 25 minutes with an investor who most likely is a little bit multitasking and may be fully paying attention and may not be fully paying attention, and I recognize it's totally unfair and really shitty. But I think the hardest meetings are where the problem is not clearly articulated, and like that hook on what you're doing that no one else is doing, or really trying to get the VC to understand what the problem is. Like so often, like I've had founders get really, really deep into the weeds, and then it's sort of like, whoa, wait, like what are we even talking about? Like what is the key problem? And really in fintech, like so much of it is pretty straightforward. Like a lot of what we're doing is replacing cash and check and replacing humans in the loop, and so it's sort of just like being able to distill down exactly what you're doing, and then hopefully that's enough of a hook to then have an hour-and-a-half meeting to really dive deep into all the weeds and go a layer deeper and like keep proving your point. But I think really nailing down that message in a short amount of time is sort of the key thing for us.
Awesome. And then maybe for the founders on the panel, the question I'd ask is, when you've done fundraising, I'm sure there was a huge learning curve there. So when you look back, what was probably the one thing that stood out to you as something you probably hadn't realized before you went into the fundraising process? Like, what's that one thing you were like, oh wow, I wish I'd known before I started fundraising?
I mean, there's so much. The one thing that stands out for me is I've only ever had one venture-backed business, so I don't have a ton. But from my experience, I've gone through 2 formal rounds. And the first time around, everyone says run it like a really strict process and it's all a numbers game. Where I believe that, but I also don't fully believe it anymore. I think it's really a relationship business. And so the second time around, half of my round was people in my first round, and the other half I had known for about a year plus, if not longer. And so I think it's really important to keep your investors in the loop with what's positive and negative, because if you just sow the positive, they can't help you with the negative. If you just sow the negative, you're not putting yourself in your best footing. And so I've spent a lot more time growing my community of people that I keep in the loop, and so they know who I am, and they also know that I act on what I say. So it's helped me develop as a founder. It's also held me really highly accountable. And get a little less jaded, because if you're gonna be in a relationship with someone for 10 years, you should know them.
What about you, Vrinda?
I just so echo everything that you said, so I'll say something else. So we went through Y Combinator a few years ago, and what was really interesting was we're paired in groups based off of our product and our industry. And so mine, of course, was fintech, and you know, everyone looked the same, and then I, you know, looked like me, right? So we would do practice pitches before we formally kicked off a fundraising process. And it was so interesting hearing the men and how they were pitching, and then me, right? And actually, our YC partner called me out, and he was like, "You have the biggest opportunity of anyone here. Why are you not selling it?" And it was this very interesting moment, first of all, to be called out in that sea, but also to really reflect on, you know, why am I not talking about this huge opportunity that's in front of us to serve women? And, you know, a lot of times, I think for my psychology, especially in the day-to-day, you're like, well, what if this, you know, something goes wrong, right? What if I can't do this? What if I'm unable to unlock that? Right now, like, there is a fire going on in my Slack right now, so it's really hard to think about, you know, what the huge opportunity is. But, you know, the advice I got was, well, what if everything goes right? Like, what if you actually unlock this? What can you actually do? And so I think it was really helpful to get that feedback, because so many times I think what's beautiful is, you know, we tend to be more humble. I don't know if that's a woman thing, I don't know if that's a cultural thing, I don't know if that's a me thing, I don't know what it is. But it was so powerful, I think, to get that feedback, to really sell what you're trying to do and really like believe in yourself, which is something that I think prior to that conversation I hedged more, and I'm like, this is a huge opportunity, and I'm super excited to go after it.
Awesome. Thank you. So there's been a lot of excitement in the last year or so, you know, around some big themes in fintech, right? So I'm kind of curious for everyone's take here. Maybe as an investor, you see a lot of it, but even for the founders, I'm curious if you see a play for any of these themes in what you're building. So of course, we've got to start with Gen AI, because that's, you know, obviously top of mind. You know, the question is really, do you see an opportunity for Gen AI in fintech, right? And if so, kind of which parts of it, and if any of you are actually working on it, I'd kind of be curious to see where you see the opportunity within what you're building. Lizzie, I'm gonna put you on the spot there.
Yeah. I feel like we have a slightly contrarian view of AI at TTB. So yes, I believe there is a role for AI in fintech for sure. I think every single company will use AI in some way or another to automate their processes, their own operations, and even help, especially in consumer finance and also on the B2B side, there's a lot of opportunity to apply AI in what you're building. I do think we're kind of in this frenzy period right now of AI, and I think there's a lot of hype around it, and I think there's going to be a lot of customer churn. I think there's a lot of experimenting happening, and so it looks like some of these AI companies are growing extremely fast, and that's not to say that that won't last, but I do fear that there is going to be sort of that drop off, and then we'll have a more mature sort of application in the fintech space specifically, because it's such a regulated industry that I'm not totally sure how that's going to play out. So we, especially at the early stage, we're sort of letting this first phase sort of play out and encouraging our companies obviously to use it, but not making as many immediate bets in AI specifically in fintech. But I definitely think it will help solve a lot of problems, especially in the really big areas like insurtech, for example, where like there's been no innovation in insurtech. It's been so hard to change. Like I do think AI will play a role in that shift. I just don't know when exactly that will play out.
I mean, I wouldn't say it's contrary. I agree. I think at Upfront we always say that the intersection between, listen, I don't know if AI, like generative AI is like it will be embedded into every way that people build going forward, like whatever it may be. And in the intersection between like fintech and AI, I always say like I think we're overestimating the value add over the next 3 to 5 years, but underestimating what it could be in the 8 to 10 year period. But I do think in the near term where it actually is very, very compelling is for industries like financial services, insurance obviously is in there as well, where there is a lot of large volume of data, and there's also it's also part of a highly regulated industry, and that data for a very long time has been outsourced to people in like Kuala Lumpur and Bangalore, to these data monkeys that are then basically trying to take unstructured data and make it production level. And so what ultimately now I think is where AI has a very valuable near-term use case is around kind of that cleansing, that parsing, getting the appropriate data panels for better use cases that everyone's, underwriting, or how you think about like actually deciding like who should be account onboarding or things like that. And so I think that's where the near term is, but I do think, and I agree with Lizzie that there is a big hype and there's been this explosion of like verticalized AI application within fintech, and we are also a little wary about that commoditization, because the question is if you can build it so quickly, so can the next very, very smart, talented team. So it's a balance, right? I also think that no one really knows, because again, we're in this like new kind of era with AI.
I totally agree that everyone's using it. I use it to write LinkedIn posts. Our engineers use it. I see us more as AI curators than we're not building an AI company, or we're just doing it the same way that other people are leveraging it. But for us in particular, we have got to be really careful over the usage of the word AI, because the SEC is coming after anyone in the investment management space, and they're starting to make a real model out of it. And I think that rightfully so, because investment, and specifically personalized investment advice, especially if it's supposed to be systematic versus non-systematic, really matters. And so if you're training an AI chatbot and it makes mistakes, you're beholden to that, just like a person would be beholden to it. And the SEC particularly doesn't really know how to navigate that quite yet. Another thing I've noticed is our customers don't really want it. We do behavioral coaching, and AI is not new. It's been around for a long time. Noom tried AI coaching 7 years ago, and it was actually a big failure because their customers felt not seen and heard. So whether you're using it or not, you need to think about, do my customers want this, or do they want it to truly feel more personalized? I think you can use AI to make things feel more personalized, but it's not as sexy for everyone. And so yeah, it's a balance about using it for growth, but we're cautiously optimistic about it.
What do you guys know?
Yeah, same. We've kicked around the idea of, okay, customer service, but exactly to what everyone's saying, it's that, what you're saying is you're beholden to it, and, you can't just, there still needs to be human intervention here, right? Regardless of what gets pulled out. But I'll take a slightly different approach to the question. One of the kind of funny things we've been thinking about is, customers and users can see their transactions, right? Of course, it's a debit card. And so I've always wondered, especially as we think about data and what to do with it, a lot of the surveys and a lot of the research, even when I was at Visa, was customers don't have a problem sharing their data. It's more, what are you doing with it, right? And how is this actually helping me? And so I think it's kind of interesting where I actually went to do this today. I didn't have time, but to upload my transaction history into generative AI and see what it would say about me, right? Because every single dollar we spent has to do with our values. And I wonder, is this like the personality test of all personality tests? So anyway, I haven't found a serious application for it just yet. I do think it's very hard to replace humans in a very heavily regulated and very important space with some very serious consequences. But I do wonder, are there more kind of like interesting ways to use it that might make finance feel more personal, more approachable, et cetera?
Awesome. Okay, so I'll ask one last question, then, you know, if we have time, maybe we can have questions. We'll go from there. This idea that, you know, in the last couple of years, there's a lot of talk like fintech is dead, right? And I think partly with everything that's happening, the macro, I think we had a lot of very buzzy companies raise in the last, you know, 2020, 2021. But, you know, you hear that theme a lot, but clearly a lot of us are in the space, I think are excited about it. So I guess the question, last question for the panelists is, what is your response to somebody who says fintech is dead?
I mean, it's not. I think that we're just in a time where, you know, 2020 to 2022, we were at a boom, and it's just like a pendulum. Like there's a correction of the market today. So relative to the amount of fintech companies that were funded, you know, 2 years, you know, 3 years ago, it definitely is less. But that being said, I think, you know, with startups, it is a what we call like low probability, high outcome game, in the sense where it's very, very hard. Like I have so much respect for like founders for that very reason, because it's a very, very hard business to be building, and it's not for the weak. And from that perspective, and so I think it's just been a natural correction, the market itself, and we see that as well. But I think you're seeing like in the public market today, like things are coming back, and you know, knock on wood, but we're gonna see ideally some exits come through. But I think it's just like a healthy correction of the market.
I also agree. I don't think it's dead at all. I'd rather be in a line of work where A, there's less competition, and B, when you solve problems with money, then you don't always make the best choices. And so for us, we've had to be succulents. We've been watered less, but we've made better choices. And I think that's why we're around today. And I think that's why, it's not the perfect analogy, but some of the best companies that we all know came out of the financial crisis. They made really good choices. So I'd rather be a company that's coming out of a challenging time, because I very much so believe that it can help us make good choices and be much more successful. And the same is true for the fintech industry. Maybe it's watered a little bit less, but the ones that survive are gonna survive for a reason, and a good one.
I agree, fintech is not dead. So I think we're all on the same page there. I think that phrase came from a lot of generalists who were dipping their toes in fintech and didn't totally understand what the sales cycles look like and who the buyers are and what the different revenue streams are, and then it's not all SaaS, and that there is something called transaction revenue, and there's just different ways of making money that's different from your traditional SaaS company that's pretty straightforward. And so I think a lot of those investors were like, whoa, dang, like these companies do take a really long time to build. I think we all forget, like, it takes 10 years to build a really big company, and we were sort of faked out a little bit in previous years by some big exits and big fundraisers, but realistically, I think better for all of us, like true fintech investors have stayed through and have been around for a long time and will continue to stick around for a long time, and so those are the investors that I think will understand your business more.
Yeah, I'm like, cannot compute the question. It's like, as long as money is moving, that's fintech, and fintech is financial services and technology. Those are two of the biggest industries. They are the two biggest industries, right? So it doesn't make sense to me, and I don't know, I don't really understand. You know, people say fintech is dead. It's like, money is moving, people are spending, money exists, it has always existed and will exist. So I think it's very much alive.
Awesome,
It would help if banks moved a little bit faster and like signed a few more contracts, so they could then
Why
like some
we
of
need
that.
better operating infrastructure for
That I think would really help everybody, but.
Yeah.
That's true, but I think on that point, and maybe it's something that, you know, Catherine, you mentioned
Yeah.
up front, right, just to kind of wrap this up, I do think sometimes in this space there's a little bit like the fintech versus the banks, but I
Yeah.
think what we're also seeing is there's actually a lot more collaboration happening. There's actually a lot more opportunity, right? If anyone's kind of watching the space around what's happening with banking as a service, right? The platforms and like consent orders going out to banks. It's not like anyone's winning and anyone's losing. I think it's just pointing to the fact that there's actually a lot more opportunity for collaboration between the incumbents and the newer players. And I think there's some themes in fintech as well where some of the newer players have clearly won, but I think in some like insurance or wealth management and stuff, I think the existing players have also, you know, shown their value. So I think with that, I will say, I think one summary here is maybe that fintech is not dead, which is promising for all of us. I mean, do we have time? Maybe we'll take like 3 questions, and you know, see where that goes.
Hi. So one question was like, you know, where fintech traditionally has been perceived as being super small, like a drop in the bucket compared to traditional financial institutions. Do you see that like with things like, you know, what Mercury is doing for personal consumers? Do you see that changing where now fintech is kind of becoming like more front and center, or do you feel like structurally it's the industry is such that like, you know, the traditional players are kind of like, they have such big moats, they're always going to win no matter like how good the tech might be. Any thoughts there?
Who wants to take that question?
I have some strong opinions on this. I think, you know, I've worked at Visa, now I work on a consumer fintech, we're building a neobank, right? And I think traditional banks, we also have a banking partner, banking as a service, like that's very alive for us right now and deepening that relationship as well. And one thing that I'm noticing is that banks are really good at being banks, right? They're really good at keeping your money safe. They're really good at following compliance and regulate, like you trust a bank, right? You trust a bank to keep your money safe, right? That's what they're really good at doing. And I think there's so much opportunity, especially for me with consumer, right? There's so many better ways to serve people, and that's not a bank's core competency, right? So there's so much opportunity as to where do legacy players fit in? Where do the incumbents fit in? They're really good at doing certain things, and you know, on the places that they're not great at doing, there's still so much opportunity there. So I do see a world in which collaboration is happening more closely. For us personally, we use a banking as a service provider, but very recently have done a direct relationship with our banking partner just to deepen that piece of it as well. So that's very alive, but I have a strong hypothesis that there's so much opportunity as well to innovate.
Another thought. I used to work at Goldman, and they tried to be a consumer bank, and that didn't go so well. And I think that I totally agree with Vrinda that they're not tech companies, although they want to brand themselves as such, especially a company like Goldman that's been around over 100 years. It's really challenging for them to move quickly if they can. So I'm actually really interested in how community banks might be able to step up, because they're actually being forced to innovate as they close their doors and become dependent on technology. So I hope, because I deeply also think that community banks are the original impact investors. They reinvest into their communities much more so than a Chase Bank would and will. But it's also going to take them getting comfortable with tech, because a lot of those folks have been around for a long time. But I'm starting to notice, I don't know if you guys have too, but community banks are starting to angel invest, and they're starting to say, you know, if I put a couple $50,000, $100,000 checks into this business and they do well, maybe I'll buy them.
Their LPs into venture funds.
Yeah. And lastly, I think that tech, especially at the pace that it goes, is you want to see an exit in say 5 years. You're not going to truly, and my perspective is, build a public company at that pace, especially a bank at that pace. So they're going to keep getting bought, but maybe the buyers are wrong, because the buyers don't know how to handle them. They'll shut them down. This happens time and time over again. Fidelity, one of the biggest institutions, doesn't buy tech. That's just what they're notorious for. So again, I'm really interested in how community banks can step up and create more innovation across the board.
Any other questions?
I have a question. What are some of the emerging trends that you see that could impact fintech now and the next few years? And how do you think startups can adapt to capture these trends?
I do. So one thing that I've observed in fintech is there's a lot of repeated ideas, and there's a lot of things that we've seen over and over again. And this happens to me all the time where I meet a company and I'm like, oh my god, this is so cool, and I bring it to my partners who've been doing this for 25 years, and they're like, yeah, we've seen this idea 4 times over the past 25 years. And I do think there is some innovation in go-to-market. I think that sort of plays into the community bank point. I think there are more creative ways to reach consumers for less money. There are different ways to engage small businesses. Like, I do think the go-to-market element is where companies can really execute on the vision, because realistically, a lot of the products are going to be the same in sort of like a time and place and a why now. And so maybe things like AI and where we are in the macroeconomic cycle can help create that time element, but then I think the execution really is about go-to-market. So I don't know if that totally answers, but I think some sort of like innovation in how products are distributed to small businesses and consumers is sort of where I think the next wave of companies will differentiate.
Another thing, I think we've talked about this a lot, which is around like verticalized, like embedded fintech is like something where I think there's been a lot of great like horizontal fintech players that have popped up and that primarily sell to tech, and you know there's a whole slew of legacy analog verticals that just haven't necessarily adopted like technology at the rate that tech companies do, but still do purchase orders manually or are still sending payments via ACH wire, like here's my routing number. And so there's so much opportunity. I mean, I'll give like supply chain logistics as like one, but there's just so much innovation that is still ripe for disruption for fintech in some of these like what I consider large TAM, but like highly specialized verticalized, where it's like you're building a product that is specific to a end user that isn't tech savvy, but there's a lot of like benefits for them to move quicker or to help with their workflow at the end of the day. And payments is a huge part of it that has yet to be disrupted. So that's another area where like I'm spending a lot of time in personally.
Yeah, so I think one of the questions I have is I've been working in banking for 7 years, moving to consulting, and I can see a lot of challenges working with leaderships in banking, especially convincing them to really adapt into technology. So we'd love to hear, what are the challenges that you face working with different banks, and what have been your strategies in overcoming those challenges? And I think a lot of time it's political has been the biggest pushback on a lot of innovations or technologies advancement.
Can I actually take a stab at that question? Because, in part because I think we're all touching the banking sector in some form, right? And we're talking about, like, I think fintech is not just stand on its own. Ultimately, fintechs are sponsored by a bank and all of that. And so I look at it as like there's this value chain, if you want to think of it that way. And ultimately, banks are regulated, right? They're regulated by FinCEN, and there's a whole lot of regulatory scrutiny that they come under that many others downstream may or may not feel. And so I think over the years of my experience of anything that's banking related, I take the approach that you have to sort of meet them where they're at, right? So yes, to your point, like earlier, Liz, like we all wish the banks would move faster. We all wish they would be, have better front-end tech, and they'd use APIs versus like an SFTP folder and all of that. But in the end, also kind of like what I think Vrinda said, banks are very good at some things they are, that they focus on, right? Like risk management. There's some fundamental things they're good at, and I think that's part of probably what makes them good at that is sometimes they are deliberate, they are slow, and there's just a lot of regulatory loopholes that they're kind of managing and having to figure out. So I think it's really hard if you're a startup or a fintech or anyone to sort of go to a bank and kind of just be like, you have to accept this, and you could keep doing that, but I suspect you're going to spend months and years having the same conversation. Or you can figure out how to flip the conversation to meet them where they're at, right? Which is, I've heard this consistently from a lot of bank compliance officers. They'll say fintechs like to be like, oh, let's get on a call and I'll explain to you what our risk policy is or like our AML policy. But the banks are always like, even if I can get on that call and I understand what you're saying and I like what you're saying, the reality is like I need that to be documented. I need that to be an actual policy doc that somebody else in the bank needs to approve. So I think, how do you basically get smarter at knowing what they need and how do you meet them where they're at? Because ultimately I always look at it as like, your goal is to move the process forward, right? I don't know if anyone here is single-handedly trying to change the banking system or change the way compliance officers do things. I mean, that could be a worthy cause, but I suspect that's a multi-year cause, right? So I always say like kind of pick your battles and figure out like how to try to get to your goal. But that's my take. Curious, anybody else?
So I did strategic investing at Citi, and so a big part of our role as the investor is also helping our companies commercialize within the bank. I think what was really important in that process was finding your champion, and that is a little bit political. Like it is sort of like, who is the decision maker? Because even though it's this massive organization with hundreds of people, 3 or 5 people will decide whether or not to put budget towards your company. And so I think it really is trying to figure out, like, leverage your network, figure out who's the decision maker, who reports into the decision maker, whose bonus is going to be impacted by successful commercialization, when is the budget being decided. Like at Citi, it was always being decided in April. So if you didn't get in ahead of time, typically like a year or 9 months, then you weren't going to be considered for that year upcoming. So then you're waiting a whole other year. So understanding, like truly understanding the inner workings of the bank, I guess it is sort of like meeting them where they're at, but like really trying to understand that will help set expectations on what the process will be like, and finding that champion who can keep one foot in the door for you is really important.
I also think like the large banks do not believe in first mover and they love a good FOMO. And I actually think what Kelsey said earlier about going after that mid-market of banks where there's like very high need right now, they're like almost fighting for survival, is an excellent entry point, because there is a big thing of the whole why now. Like, for some of our enterprise like startups like that are going to sell to like these big techs, they're like, I'm gonna go whale hunting and I'm gonna find an anchor logo, which is gonna help me then open the doors to others. In financial services, it's a little bit harder, where you probably won't land that for over in a year. Like even if that's like your typical like tech, like 9 to 12 months, right? Like that's probably a 2 to 3 year massaging of the relationship, understanding the organization, that candidly, like for a startup, you don't have necessarily that like luxury of time for. So then you have to think about where within the ecosystem do you start trying to build in. And I think today there's a huge like pressing need for community bank, regional banks, where they're constantly in the news. They have like their commercial like real estate debt is like on fire, their portfolio. And so like those are the kind of areas that we think would be an interesting go-to-market, like to Lizzie's point of like, who do you start with, where you are able to balance out some of it, like reducing the sales cycle while also creating some like FOMO, some like, this community bank, this regional bank is using this, a big cohort, and you start building in there, and then, who knows, maybe that person goes and ends up working at Citi at someday or at JPM, and it's all like a very intricate network, and it's like, who do you start with there? So, yeah.
I'll add one quick thing. So we work very closely with the compliance group at our banking partner, and it's so interesting because after working with them for a few years now, I've learned 2 things. The first is they are extremely scared for the right reasons, right? There's so much regulatory oversight right now. In the last few years, there's been a huge correction, right? A lot of fintechs were working with these banking as a service providers, and we all saw how that went, consent orders, like they are fighting for their lives, they're afraid. So I think that's one thing to understand, and that's where the meeting them where they're at is, it's been I feel like when I first started, I was like, I have this awesome innovative idea. I want to do this, and they're like, absolutely not. Immediately, no, please stop. Like, don't ever say that again, right? So that's one part. On the other side, they are really trying, and they really want to understand. And it's interesting to see where they are coming from, like what their zone of proximity is. So I remember when I first mentioned TikTok, they were like, what's TikTok? I was like, we're working with an influencer. They're like, what does an influencer do? And so when you think about where they're coming from, I remember I was like, we want to gamify this thing. And they're like, what does gamification mean? And actually it was the first time that I grew up in Silicon Valley. Like, I never even did not compute that someone might not know what that is, but it's also just, you know, they do have an appetite to try to understand, but being able to help them understand in a way that's not scary, that is a superpower.
Awesome. I think we'll wrap up the evening, but before that, another audience poll. Actually, maybe it's a poll for everyone in this room. Who is still bullish on crypto? Awesome. And are the others like on the fence or just like not crypto people? Okay, I always think it's really interesting because I feel like kind of the world's like a little divided. How about anyone here pro crypto? No.
Not
That's okay.
I don't spend enough time in it to have a stance on it.
I think not consumer. I think there are some really interesting other use cases, but
Like blockchain use
Yeah,
cases,
blockchain,
I think
exactly.
is
That's-
a big
yeah.
thing, and I think institutions will more likely build it than partner with fintech.
Perfect.
I think
Awesome.
if you asked an audience of 22-year-old tech bros, you would have a very different mix.
It's possible. Though somebody was telling me that their grandmother is like really like holds a whole lot of Bitcoin. It kind of like blew my mind. So they do exist. Anyway, thank you so much, everyone. Thank you to the panelists and the audience.